What's up, guys? Welcome to the very first trade breakdown, which this is going to be a series where we're just looking at, the trades I took the past week, maybe one or two, usually one. I like to focus on one, so you can kind of, get inside my mind and see, what I'm thinking about before I make a trade, before I set a trade, whether it's a win or a loss, and hopefully you can learn from my mistakes and also my successes. So yeah, today we're going to be looking at, put it here, Swiss yen. I covered it in the outlook last week. I told you what I was looking for, and everything pretty much happened the way I expected it to. So I just want to kind of give you an idea of how I, what's going through my mind, when I take these trades, and specifically this trade. And yeah, I hope you enjoy. Of course, I got a rep. Chelsea, we just won today, but we just beat Liverpool, so I had to come and representing. If you're not a Chelsea fan, tough. Anyway, this is not the place for that. We're here to talk about winning trades. So why don't we get into that? Okay, so why don't we just jump into it, right? So here we have a very bullish market, right? So looking at this market, I'm saying bullish, very impulsive, right? This began around February, and as you can see, ever since February, we have just been pushing and pushing. Very impulsive, very few opportunities to scaling. Maybe here, this could have been a good chance to scale in, but I mean, this is just a lot of, bullish price action. So how did I get into this? Well, so number one, I switched down to a lower time frame. I switched down to the 4 hour, right? You can see the winning trade is there. When I switched down to the 4 hour, this was Monday, right? So on Monday, let's even go down another time frame. Let's go down to the hourly. I switched down, and what do I see? I see we're in a pullback phase. Now, usually when you're in a very bullish market or a very bearish market and you see a pullback, you want to monitor the pullback, because usually in a very impulsive market, right? So obviously when you go to the lower time frame, you can see the nitty-gritty. But if you're on a higher time frame and you see a very impulsive market, when you go to a lower time frame, what usually happens is you see a pullback, a range, and then continued direction, whether it's a buy or a sell. And so you see plenty of that over here, right? So a pullback, range, slight pullback, up, range, and so anyway, so I see this on market open Monday, right? Because I talked about this last week and Monday. And what am I seeing, right? If you can just hide this actually for a bit, what am I seeing here? I'm saying we have pulled back. We didn't take much liquidity. We still have this low here, but we did take out all these lows. So these lows are taken out. And I'm seeing we have a pullback and we're in a range. So what do I usually do? Well, I take my trade like this, right? So I'm just actually going to take this out so I can show you exactly what I'm doing. And I want to go long on the fractal. So I'm very big on fractal structure, which I guess I'll get more into as time goes by, but fractal structure is king for me. And right now, this is our fractal high, and this is our fractal low. So what do I want to see get taken out? Our fractal high. So once our fractal high gets taken, now usually in some of my trades, I'll wait for a retest down here and then back up. Because usually what happens actually, if I can just delete this, if we come here, usually what happens in these kind of situations is we'll break the fractal high. We may have a small retest, probably fill an imbalance, and then now continue up to the main move, right? So that's usually like my main entry move. But sometimes in a very impulsive market, that opportunity never comes. So in my mind, I'm like, okay, I'm just going to have an aggressive entry, right? And I'm going to target a new high. So immediately we break structure around here. I'm not taking this wick into account. I take this trade, and I usually put my stop loss right underneath this range. So this is the 1 hour range. So usually sometimes I'll put my stop loss, underneath the swing low, but for the sake of risk to reward ratio, and because I know this is a very bullish and impulsive market, I'm not doing that. I'm just going to put it underneath this 1 hour range. And what am I going to target? I'm going to target a new high, right? So I think I targeted around here, and my stop was actually a bit tight. I think my stop was around something like this. Yeah, it was 2.26, 2.24. I'm not going to get it to the dome. And as you can see, we break structure, we don't really have that much of a retest. We just keep going, and then we hit TP, I think sometime on Wednesday. Yeah, Wednesday lunch. After I finished my lunch Wednesday, I got the notification on my phone, TP hit. So guys, that's just a very basic breakdown, and that's how you can take trades in a very impulsive market. That's how you can look for trades and take winning opportunities in a very impulsive market. Because I know a lot of people complain, they're like, oh, the market's just going up, where do I find a place to enter? Because obviously you don't want to be buying anything at the top, right? You don't want to, you always thought, buy the bottom, buy the dip, buy low, sell high, right? If something's already flying high, you're like, how do I scale it? Well, that's a very easy way to scale it. Number one, if you are keeping track, it's bullish, right? So we're looking for a buy. We look for a break of structure. Now, fractal structure, just as I explained to you, if I can bring back my path tool. Hello. I'm not gonna really use that one. Low over here, high, and is our low, right? So here is our fractal low, and this is our fractal high. Now, if we want to look for a long, just as I said, we want the fractal high to break. Once the fractal high breaks, again, my number one entry model is if it's a very impulsive market, especially if it's a yen pair, I just buy on the fractal break, right? If it's probably a dollar pair, I may wait for like a retest, as I spoke about earlier. But in this case, I don't do that. So just like that, guys, we have a very easy 2.26% increase on our capital if you're risking 1%, like you should be. And yeah, that's just a very basic way, and that's one way you can really, trade a very bullish or very bearish and just a very impulsive market, right? Just those few steps. Looking for liquidity, looking for the range, and then just following order flow, right? Following fractal structure. So that's it for today. I don't want to ramble too much because I still have the weekly outlook to shoot. So yeah, that's all for today, guys. I hope you enjoyed this episode, and tune in next week for another winning trade, because we win every week around here. Well, that's a lie, but most weeks we win. And if we take a loss, we'll break it down too, right? We're just gonna break down every single trade. Any trade, I feel like there's a lesson to be learned every week, because there's a lesson to be learned every week, and that's the beauty of trading. So yeah, that's all for today. Have a good one.